On tap for earnings this afternoon is another great rush of companies. After the closing bell, Advanced Micro Devices (AMD) at Twitter, TWTR, are up 73 cents, or 2.4%, at $31.23, having given up some gains following its better-than-expected Q1 revenue and earnings report this morning, but also a somewhat muted forecast for this year's revenue outlook. The company cited tough comparables, given a bounce back in the business last year, and so it expects it may see the more limited revenue growth it saw in the latter half of 2016. Brian Weiser of Pivotal Research Group, who has a sell rating on the stock, calls it a spectacular report, but then shrugs his shoulders. Overall, the results represented another quarter with ongoing progress which was consistent with our longer-term expectations for Twitter as a durable, if niche-y, but highly differentiated, platform for digital advertising. Trump might not like Amazon TV. There were rumors yesterday Amazon.com, AMZN, may be interested in buying television shopping channel operator Evine Live, EVLV, but D.A. Davidson's Tom Forte, who follows both Amazon and Evine, and rates both stocks a buy, raises the point that the Trump administration might block any deal. Evine is a distant number 3 player in television retail behind QVC and HSN, but it still would offer Amazon a way to merchandise to 87 million American homes. Forte sees a risk a deal would not get regulatory approval. Simply put, would President Trump want Amazon to broadcast into 87 million homes across the U.S.? More than likely, we believe he wouldn't. Amazon stock is down $1.91 at $1,458, while Evine is up a penny at $1.07. Checkpoint disappoints in other earnings. Security technology vendor Checkpoint Software Technologies, CHKP, is down $8.03, or almost 8%, at $94.88, after the company reported Q1 revenue just about in line with consensus, and beat on the bottom line, but forecast this quarter's revenue lower, projecting $445 million to $475 million versus the average $476 million estimate. Tis Goldilocks earnings. Shares of Texas Instruments, TXN, are up $2.61, or 2.7%, at $101.03, after the company yesterday afternoon beat Q1 revenue and profit expectations and forecast this quarter higher as well, citing continued demand for chips in the automotive and industrial markets. Stacey Rasgon of Bernstein, who has an outperform on the stock, writes that this may have been just what the doctor ordered, as, in a somewhat nervous environment, guidance was reassuring. Raymond James's Chris Casso, who's got a market perform rating, writes that the report was strong, but not too strong, arguing it strikes the right balance between too good, driving fears of overheating, and not good enough. The company cited broad-based strength for the March quarter, which bodes well for the rest of analog semis. Alphabet preferred to Facebook. Shares of Alphabet, Google, are up $3.76 at $1,026.40, after Stifel's Scott Devitt raised his rating on the shares late yesterday to buy from hold, with a $1,234 price target, writing that he likes Alphabet relative to Facebook, FB, amidst the current heightened level of scrutiny about privacy and advertising. Devitt zeroes in on the key difference, as he sees it, between the two properties. While Alphabet, Google and Facebook both hold significant amounts of information on the consumers that use the company's respective products, there is a major difference. Alphabet, Google's data collection relationship with consumers is private and led by consumer intent, while Facebook's relationship is public and without consumer intent. Verizon stabilizes. Shares of Verizon Communications, VZ, are 47 cents, or 1%, at $50.14, after getting 2 upgrades this morning, from SunTrust Robinson Humphreys Greg Miller, and from UBS's John Hodlick, following yesterday morning's better-than-expected Q1 results. SunTrust's Miller writes raises his rating to buy from hold, concluding that fundamentals are stabilizing. Among its virtues, Miller observes the company is still a leader in the industry, with 43% of U.S. postpaid subscribers, is still the technology leader, with a network edge, and carries less M. Further, with the stock continuing to underperform, we find valuation provides more downside protection and believe underappreciates tax reform benefits. SendGrid's promised shares of email service bureau SendGrid, Send, which went public last November, today received the thumbs up from Canaccord Genuity's Richard Davis, who starts the stock at a buy rating, with a $32 price target, calling it a quite promising business. Davis characterizes as a company with realistic but compelling TAMs, total addressable markets, and an obvious path to significant FCF margins, in contrast to flashy stocks with high growth that can run out of steam. He particularly likes the self-serve way it signs up customers, which sets up Send to generate upwards of 30% operating margins with scale. SendGrid stock is unchanged at $28.69. Sign up to review. Every evening we'll review the news that moved markets during the day and look ahead to what it means for your portfolio in the morning.